Hey there traders, welcome to this ICT Silver Bullet New York session market review, May the 23rd, 2023, where we're going to be looking at the US500 or S&P 500, depending on how your broker labels it. Let's jump into the charts and see what we were offered in today's New York morning session. So I've pre-marked out some levels for us. We can see that earlier on today, we have taken out the previous day's high. So the New York session high put in on Monday, we've swept that and immediately closed back into the range. So we were unable to displace above this and started seeking liquidity lower down. We then took sell side liquidity that we had from Friday and immediately closed back into the range again. So quite a range bound market that we're looking at today. Given the fact that we've taken sell side and are now displacing back into the range, I would be looking for some kind of buy side liquidity to be taken before we take another attempt at the lows. So coming into the Silver Bullet hour, I'm going to have a bullish bias. This nice green area is our new week opening gap. So we're hovering in there and we have a 15-minute fair value gap just above us at the moment into a 15-minute order block. The 1 minute. And let's see how this session starts. So, coming into the hour, we are getting a pullback initially. No fair value gaps on the bullish side to speak of at the moment, producing bearish fair value gaps. Big dive down into the range, so it's quite a nice thing to see. So we're taking some sell side here, swing low, and a sell side here. We've left the actual low of the session intact at the moment, however. So this is my favorite setup. We can see strong bearish reaction, leaving a fair value gap to the downside, and then a good buy back up, leaving a fair value gap to the upside. So this imbalance between both is our balanced price range. I really like to see these for entries, which means I would put my buy stop here, 50 pip stop, 50 take profit. So it does cover low, which is nice, and we're inside these swing highs. So we've got the session high there, which would be a nice target for a longer term hold. I would just want to grab my 5 handles and get out of the trade. Let's see if we get tagged in. So we're tagged in now into the trade. Pulling up nicely. So we'll measure this out. We were tagged in on 22, so this 32 here, this line is my 10-minute window where I would be looking to close out of the trade, or at least go and break even. We've broken the swing high here, so that's a nice sign. So let's see if we can get in. So we're respecting this fair value gap now. Below it's still respecting that fair value gap, so we're not closing below the fair value gap. This close is more or less 50%, so we'd like to see the 50% of fair value gaps hold, which it is. Again, respecting the fair value gap. So we're outside our 10 minutes now, so we've surpassed the 10 minutes, which means that I would be going risk-free on this for my personal risk management. And then we hit target shortly after. So just tag target just now. So overall we were what, 13 minutes in that trade before hitting target. See how this plays out. Take another one at the high. So again, sweeping the highs. We've taken this high now, so these were relative equal highs. You can see what we've put in here. We had some buy side here that we'd taken. So you would definitely want to be looking at taking some profits if you were looking to hold this even higher. This could be a rejection point. Leaving a fair value gap with a break of structure. I wouldn't want to be going short because I do think that we've got higher levels to take into account. However, for those of you interested, you would have been tagged into a short now. Respecting the short, yeah, respecting the fair value gap, coming down. Definite trade to the downside as well. In fact, it's probably a better trade to the downside than what we had going up. Much more energy in that particular move. Let's see where we are. So there's two potential profitable trades there. If you were just going for your 5 handles. And again, we're just kind of consolidating. Making a move back up. We're outside the window now, so your setups are done and dusted. We have put a fair value gap in here. Depending on which side of the market that you decided to enter on, you could be holding for longer term targets. We're going to run out of time here because I am nearly up to live time. We're at live time, so we're just in the middle of the range. So two potential setups, both profitable for the 5 handles. It's really a toss-up now as to which one is going to play out. Is the bullish bias going to play out, taking us up further into the range? Or the bearish bias, which is not the one I would be favouring, going to play out, taking more sell side. And ultimately bringing us down into possibly this new week opening gap and further sell side liquidity lower down. So that's how the potential trades played out today. Trades either direction, long and short, both profitable on 5 handle scalps, and you would want to be nimble in your trades because, as we've seen, we are in a pretty tight consolidation at the moment. After a big explosive move on Thursday, we've just consolidated. Friday, Monday and Tuesday looks like it's going to be further consolidation. Hope that was helpful and you got something from the video. Please leave comments or questions down below, and if you did find the video useful, please like and subscribe. It massively help me out. I'll see you tomorrow with more updates on the ICT Silver Bullet setups that we get in London and New York. Thanks for watching, guys. See you soon.